Welcome to a Mags Market Monday, where I update you on what's going on in the commodities markets. For those of you who don't know, I was a commodity broker for 7 years, where I specialized in agricultural commodities and precious metals. And the precious metal markets are what ultimately led me to starting an ammunition company, because I believe ammunition is also a commodity. And so what I've picked out for us are a few key commodities that I think would be important to us as Americans. And so what I've got picked out here are gold, silver, copper, lead, steel, crude oil, and 9mm 124 grain FMJ bullets, and 5.56 62 grain steel tipped ammo. The reason I picked these two calibers is because they are the most popular domestically and in the military. And so that amount of usage in my mind tells me that it would be good to track as a commodity in that way. And so on a weekly basis, we're just going to go through the numbers. What are the 52-week ranges? And track what's going on in these markets, because in order for us to become successful in becoming financially prepared, we have to know our numbers. And for the stackers out there, we need to know where the highs are, where the lows are, and where we're at right now, and what may be a more opportunistic time to add a little more than we usually do based on where the market's trading. So let's go through them here. Gold. This is for the closes on the week of the 7th. These are mostly based on the December contract because that's what's the front month right now. So gold closed at $4,009.80. That's up $15 from a week ago. The 52-week range on that for the low is $26.65.70 and $43.98. There's a pretty wide range in that gold because gold really broke out here in the last month, and in a big way. Huge way. I mean, we haven't seen a move like this since 2011, if I remember correctly. So silver closed at $48.13. That's steady with a week ago. The 52-week range on that is 28.5 with a high of 53.76. That was a very recent high. We've just came off of these highs on these precious metals here in the last 2 weeks. Copper closed at $4.95. That's down 13 cents from a week ago. We have a 52-week range on that of $4.14 with a high of $6.02. That's very high for copper. The reason I picked copper is because that's essential to ammunition manufacturing, along with lead. Lead is not a big mover, but I do believe it is something to pay attention to. Lead closed the week at $2,047 per metric ton. It's a metric ton, not a U.S. ton. That's steady with a week ago, and that's pretty well steady for the last month. You don't see a big range on the lead market right now. The next thing I picked is steel. Steel I think is important because we've gotten so far away from owning our means of production and making things here in America. And now that we've gotten kind of refocused and are working on bringing manufacturing back to America, I think the steel prices are important to track. We've really got to get that dialed in and get things back to being made in America. It's not going to be easy, but we have to for our national security. The steel market closed at $8.79. That's down $9 from a week ago. The range on that is $780 to $890. So we're still up towards those 52-week highs right now. Crude oil closed at $59.75. That's down $1.23 from a week ago, with a range of $54.16 to $71.47. So we're a little ways off those highs, more down towards those lows. I think this is probably a fair area for crude oil. You know, gas prices aren't too high, keeping things good for everyone's pocketbook. I think this is a fair price for crude oil right now. I also put in here 30-year bonds. I don't think bonds are necessarily crucial to us, but they are important to our economy and what's going on in the world right now. And I think we're going to have some problems here in the bond market in the next coming years. And so I think it's important to track so that we know what's going on in the bond market on a weekly basis. Now, the thing to remember about bonds is that they have an inverse relationship with the price to yield. When the price of bonds go up, the rates go down. And when the prices go down, the rates go up. So you got to keep that in mind, because I'm just going to be rattling off the prices, and you're going to have to keep the inverse relationship in your mind. But the 30-year bonds closed at 117.02, and that's not too bad right now. I didn't put together what that was from a week ago or the 52-week high and low, but I will have that next week for us. The last two commodities are going to be 9mm 124 grain FMJ ammo. The market on that right now is about 25 cents a round. The range on that is anywhere from 20 to 45 cents depending on where you're getting it from. Now, since COVID, that range gets exponentially higher, but that's not really within the last year. Ammo has come down a lot here in the last year because there's a lot of it on the market right now. So we're just going to kind of keep track of that and start building our own data as far as what the highs and lows are, what the 52-week high lows are, and what that market's looking like on a week-to-week basis. 5.56 62 grain steel-tipped ammo is trading at about 49 cents a round. The range on that is anywhere from 40 to 65, and same thing as the 9mm. We're just going to start building our own data on that so we can start tracking that a little better. The thing that I think is the most interesting is we use a lot of copper in ammunition production. And copper prices have gone up quite a bit, over 30%. And yet we have not been able to see that reflected in the ammunition market yet, which tells me that most ammunition companies are more than likely struggling right now because their cost of inputs have gone up, but there's so much ammo on the market that the prices have not been able to go higher. So there is tighter and tighter margins going on in that market right now. Lead has been relatively steady. So it's not as big of a factor right now. Anyways, that is our Monday market update with Mags & Co. We will see you next week.